Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get started on this Wednesday, August 20th, 2014. Markets again are rallying higher. This has been a great rally over the last week and a half to 2 weeks as the markets again are pushing towards the master level I told you guys about a while back, and that is the 2,000 level on the S&P 500. All right, they're going to get this market above that level before next Friday. Not this coming Friday, the next Friday, which is the holiday weekend, the Labor Day holiday weekend. And again, it's very normal to see the markets close at all-time highs or above key levels going into key holiday weekends, because guess what? Then the media pumps it. The average kind of consumer, the average investor out there goes out and spends their maximum amount. I mean, think about it. If you hear that the markets are at all-time highs and the S&P just closed above 2,000, are you going to be more likely, less likely, or even to go out and buy that new big TV? Well, chances are you're going to be more likely. Your 401k is at highs, et cetera, et cetera. So the key is to always understand how that works on this market and on the individuals out there, and the Fed actually has a hand in that. So again, expect it, especially with the light volume, to continue up. Again, I still think over the next, we still have about 5 days next week and 2 days this week, so 7 trading days left. I do expect 1 down day in the mix, maybe 2 down days in the mix, but again, net, you will see the S&P above 2,000 by a week from Friday. In the NASDAQ front, NASDAQ is lagging today just up 3 points, but again, that got above 4,500, which was one of the key levels we talked about, and it continues to hover above that level, and I expect it'll stay there. Dow right now is trading just below 17,000. The Dow's eclipsed 17,000 before, so it's not a big deal, but I still anticipate it closing above 17. So basically, they're going to have headlines on a week from Friday in the media that they're going to pump all weekend long on that 3-day weekend about how the S&P's above 2,000, Dow's above 17,000, NASDAQ's above 4,500. And by the way, the NASDAQ is only about 10%, 11% away from its all-time highs, which is the only index that is not at its all-time highs. So again, could that be seen later this year? That's possible. It's another 500-600 points or so on the index, and I do think that there's a chance, although I still think you're going to get a bigger pullback following the vacation, following the holiday in early September. I think you'll still get a nice pullback, and that's something that I'm going to look to continue to short into and make money on. All right, couple things to go over on the spiders. Please notice you opened lower today, but the volume has just been so light. We had one surge in volume today because of the Fed minutes. The FOMC minutes were released at 2 o'clock. Initially, the market sold off and then reversed higher. Please note where the markets are. All right, markets went right to their all-time high on the SPY. If I zoom out on this, take a look at this, guys. I think this is just so cool to understand how markets go to these levels. Zoom back and look at this high. So see this trend line right here? This is the last time we were up at this range, and that's going back to really late July here. And then if you zoom forward, just follow that same trend line, and it goes right to this exact line. So really amazing to see the markets get up to this level. This is short-term resistance. There's no doubt about it. Could we have a pause day off of this? Could we have a small pullback? Yes, it is possible. And actually, believe it or not, if they're going to throw a small down day in, chances are it probably will come either Friday or on Monday. All right, so again, even though I don't think it's a big sell-off or a big down day, you might have a 50-point down day on the Dow, just a small pullback on this interim as the markets push up. And really, you have to marvel at the market's resiliency, the buy-the-dip mentality, because here we were at 190.5 on the SPY, right? And now you're trading at 199. That's essentially 8.5 points, or about 4% plus movement to the upside on the SPY or the S&P 500 in just a matter of really less than 2 weeks. So pretty spectacular there. But in any case, guys, that's what we have going on there. The dollar is shooting higher. I gave the alert 2 days ago that the dollar was ready to break out. I gave it a bias of upside with a 75% success rate. Yesterday, we burst forward. Today, we're continuing that push. You will not see a shortable level until you get to this upsloping trend line on the UUP. And the UUP, by the way, for those that don't know, is the dollar ETF. So that's the tracking dollar ETF. So look at that. The gold chart, let's take a look at gold. Gold is selling off a little bit. It kind of makes sense, right? Because the dollar's up, which puts pressure on gold, and also fear is down, so you're seeing people not need to hold gold as much. Gold isn't selling a ton, but you are seeing a pullback here into the 200. There's actually a gap fill here, so you could actually see a bounce on gold in the coming days, which actually would coincide with a small pullback day if we were to get that. Silver, let's take a look at silver. Silver's flat on the day, was a pretty sharp downside yesterday, continues to be weak. I ultimately think silver's going down here, guys, near double bottom, and I'll keep an eye on that in the coming days as well. The USO, let's take a look, up 17 cents. Small bounce back today after a pretty ugly sell-off. You really don't care what oil's doing right now unless you get down into this area right here. Break of 34 is your key level on that. Okay, corn today, down day, but again, beautiful bounce back, and it's interesting because corn I've seen this 2 days in a row now, just before the close at, I think, 2 o'clock, 2:15 p.m. Eastern Time on the commodity, you see it jump up. And you can see right here, just before that time frame, you saw this big pop on corn back to the upside. So it's my belief short term that you do have still a bottom in corn. I would have liked to have seen a breakout right here, but it just couldn't get through that gap fill. It's backed off. As long as you don't close below this bottoming tail low, it's still in great position. And again, I like to see how it bounces back towards the end of the day. You see buyers or short covering, one or the others going on right there. Okay, so that's that. A couple other things to go over. JP Morgan Chase up 19 cents today. Not that big of a move on JPM. Goldman Sachs only up 11 cents. TBT, which tells us about the rates. Rates are really not doing too much. You can see earlier in the day with this tail here on the daily chart, rates were higher, and this gives you an impression of what the 10-year is doing. And you can see right here. So with the Fed minutes, you saw a pop in race and then a decline right back down to the lows of the day on the TBT. So it's interesting to watch here. I still think that you might have a bottom, a longer-term bottom in 10-year rates and 10-year yields. And the main reason I think that is because of the big volume you had just a few days ago on the chart, which almost looked like capitulation. I just want to see that bull flag form now as a potential signal of that as a long play. All right. What else do we have here as the market continues to trade? Again, S&P about 13 points away from that even number of 2,000. And let's just take a look at Apple today. Apple continues to move higher, although a little bit of a weaker move on Apple. Apple is currently, I think, at split-adjusted all-time highs right now. I think I said this yesterday, but I'm not looking to short the chart on Apple just yet. It needs to get to about 101 to 103. You basically hit 101 and pierced. I still want it to get a little bit higher because of the expected light volume float that this market could see in the coming days, weeks, really until after the holiday. So once we get past that holiday, then I do think, again, as I said, that you start to see some of these charts come back in. Baidu today, BIDU, a small upside today, very minimal there. That chart is fighting the daily 20 moving average. It's holding it up right now in this light volume. I do think eventually that breaks, though. So you might have a little bit of a float up continuing, maybe back towards double top. But I think once you get up there, especially if it coincides with the later push on the markets into the holiday, then you look to short that as well. So that's a good opportunity. We are also looking at Chevron. Let's take a look at Chevron. Chevron continues to be weak. So, I mean, it's interesting to see. This was such a strong stock. Then it collapsed, and it's actually making a nice choppy bearish pattern here. Could pop up, I think, a little bit over the next week into this area, and then you look to short it. Couple trades to look out for. Hewlett-Packard reports earnings after the bell. That stock is already selling off. This has a nice bearish pattern on the chart. I never like it when the chart sells off into earnings because it's factoring in some of the move, but nonetheless, you have to kind of look at that chart and say, okay, it is bearish, so let's see what happens with earnings. All right, so we'll watch that very closely. U.S. Steel is pulling back a little bit. That stock looks like it topped out yesterday. And let me just see a couple other stocks. Boeing. I want you guys to take a look at Boeing. Boeing has a great shortable level right here. Still a ways away on the daily chart, but if it gets up to this 130 level, this even number, you got the 200 and this pivot top, you should see a pretty sharp pullback on that chart there. All right, on that note, folks, I encourage you to come join the Research Center, take the 7-day free trial, come profit with the pros. We continue to spit forth profits, whether the markets are going up or down, doesn't matter to us. All we know is that the charts tell the truth. Individual charts will tell us which direction they're going to go. We just hop on board and go for the ride. So again, come join us here. There's a 7-day free trial to the Research Center at InTheMoneyStocks.com. That's InTheMoneyStocks.com. Join the Research Center and profit for life. Take care.